And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Not a whole lot of action with the broader market indices, but certainly a lot bubbling up beneath that we are going to get to. And from there, we'll take a look beyond the broader markets and see what kind of shifts are shaping up here given earnings season. And from here, I will go ahead and share with you some of those heavyweight headline news items that did in fact drive sentiment and price action last week. And first up, we did get what is called the beige report. And this is the Federal Reserve's economic temperature taking, if I may. It comes out 8 times a year, and it's usually not so closely paid attention to, but at this juncture, given the uncertainty in the markets regarding Fed policy, the economy, and so forth, it did get a lot of attention. That came out earlier in the week, and among some of the findings was the fact that loan activity among banks has declined in light of SBV and SBNY bank failures. So that got people a little nervous that loan activity always, or for the most part, will point to contraction in the economy. From there, we did see March housing data. It was mixed, but generally positive. And that was followed by housing construction firms reporting positive earnings. So that is one bright spot in the broader markets. We'll get into that. And then earnings reports continuing to ramp up. And those reports did drive price action among the most active names this past week. And then also analyst upgrades and downgrades. You will want to pay attention to that as we progress through earnings season, because you will see movement in that stock and then stocks in that industry group as well. Next up, we did see weekly jobless claims, and it did rise ever so slightly. This is what the Federal Reserve wants to see. They want unemployment to increase, to reduce inflation. While it is taking shape, it's doing so ever so slowly, and that's in line with inflation receding ever so slowly, so not fast enough, certainly for the Federal Reserve. We did also see the leading economic index release today, and it does point to a recession. And this is not the first time we've seen the leading economic indicators report decline. So that was news that kind of dampened any progress that may have been seen today. And then also we did get early PMI data for April, and it did show a rise in this number. So that's counterintuitive to what we're seeing relative to inflation being reduced elsewhere. So net, a rather mixed market, and it was rather evident also in price action. We'll get into all of that as we move forward. Next week, important data. We will get first quarter GDP, the estimate released. And then also we have some core economic data, that PCE index later in the week, and consumer confidence, as well as durable goods orders. So let's jump in, take a look at where we close the week with the broader markets. And here we are with the daily price chart of the S&P 500. And taking a look at that close. Now, I did indicate that we did close the week above that 10-day moving average. However, it looks as if we may be just a hair below, and that is this green line. We want the broader markets to find support at a given moving average, because if we see deterioration below that moving average then becomes upside resistance. So a little too close to call, but net, we did not fall very dramatically below it. So we should be in good standing. Let's take a look at those momentum indicators, that RSI in positive territory, as well as the stochastic. So I would say that we are still experiencing an uptrend in the broader markets, but we can see on this daily price action rather myopic and stale. Certainly, again, it's the uncertainty that is surrounding the outlook relative to the Federal Reserve's interest rate hike, as well as a possible recession in the economy. So let's go ahead and move on from there. Take a look at the underlying sectors within the S&P 500. And these are those 11 sectors sorted by relative strength. I've added an RSI indicator, and they are sorted in descending order. So what we can see immediately is up here at the forefront, these three horsemen: staples, healthcare, and utilities. And these are generally viewed as more defensive areas of the market. They do offer higher yields overall. So again, pointing to and highlighting the fact that the markets are trending, shifting ever so slightly toward these more defensive areas. Certainly earnings were a key driver within staples and healthcare. We'll get into that. But net at this point in time, more favorable movement among those more value and defensive areas. So let's go ahead and move on from here and take a look at some of these other areas, because we did see consumer discretionary outperform. This is XLY. It was able to retain its general uptrend, albeit bouncing around this week in line with the broader markets. This is despite a 10% decline in heavyweight Tesla. So we did see a move in Amazon, another heavyweight name. As we move through, I'll share with you other stocks in that discretionary area that are holding in quite well and doing well. XLRE, this is the REIT area, another defensive broader area market, and it was a top performer, up 1.9%. We're not quite out of the woods yet at all. Certainly there are other sectors that are well above these key moving averages, but of note, it did outperform last week, and I'll share two stocks in that sub-industry groupings that are faring well. So from here, let's go ahead and take a look at this critical area, technology. And one of the primary reasons, there are two reasons I focus on technology. One is the fact that when the group gets going, this is where your higher outperformers are going to emanate from. But also more importantly is the fact that technology is the largest weighting within the S&P 500. You want to stay on top of the potential strength or weakness here. Very similar to the S&P, waffling a bit here. It did XLK close just below that 21-day simple moving average. And take a look, we can see that general momentum, particularly during this particular month, is receding on both that MACD black line crossover trending downward, and then also the RSI. Now, I will tell you, despite that, there are bright spots in this group, areas that are continuing to trade higher, and subscribers to my MEM Edge report will know all about that. I hope we have time, because I will also share with you where weakness is beginning to emanate within technology. So let's move on beyond the sectors, take a look at some of these sub-industry groupings, these ETFs that really are instrumental, certainly to my work as far as highlighting rotation, strength relative to weakness. So same concept, 2-month daily price chart view, that RSI, and take a look up here at the forefront, IBB. This is the NASDAQ Biotechnology grouping, and it did outperform the broader markets. Another area that my MEM subscribers will know about. We have gotten into this group. We had a nice double bottom formation, higher lows, and a move above this 50-day simple moving average, and then subsequently the golden cross formation, which is when these shorter term moving averages trade above the longer term. So net, we are seeing nice vibrancy here. In this case, I would argue it's not a risk on sentiment among investors, but rather it is because of news, true innovation that is taking place. And it is an area, if you go back to 2008, that great recession, there were 2 biotech stocks that were among the top 10 performers in an otherwise very deteriorating market. So from here, let's take a look at some of these other industry groups also in healthcare. We talked about healthcare being among the top relative outperformers sector-wise, and this is actually not the right chart. Let's get that correct one up here, and I don't see it listed, so I will share it with you outside of this view. and it is IHI. And this particular sub-industry grouping is the medical devices ETF. And take a look, super powerful upside movement here. This is what I view as the growth area within healthcare, these medical products and devices. One of the biggest drivers last week was very strong earnings from Intuitive Surgical, ISRG, gap up, continuation rally, but there are many other names in that particular sub-industry grouping that are faring quite well. So as we move through, let's take a look at some of these other ETFs here. Retail not faring particularly well. This is XRT, the S&P 500 retail ETF. Mostly online retailers are listed in this grouping, but really remaining DOA, if I may, on that particular grouping. From here, we can take a look at Brent crude that did pull back this week. Energy that had been outperforming was down 2.8% for the week, and this is certainly a good reason. There are other reasons as well relative to earnings among underlying energy-related stocks. From here, quick look at the banking ETF KRE, and we did get a little bit of a jump on Wednesday due to Western Alliance mentioning or talking about their deposit outflows were stemming. So that was good news, got everyone somewhat excited. But since then, not great earnings reports from these banks. In addition, their outlook is not particularly healthy. So bank stocks still down and out. And then another component that when it gets going can be really powerful, and this is semiconductors. And you can see this general malaise and declining phase. There is one stock left, one last man standing that is in this group on the suggested holdings list of my MEM Edge report, but there certainly are weak spots that are beginning to emerge. In this chart that I did share with you earlier, IGV, this is the technology software group, flat for the week, but generally still remaining in an uptrend. So something of a bright spot here within technology. So from here, a couple of areas that I want to share with you, names, and one is the concept of a gap up after earnings. Now we are in earnings season. By and large, it's been mixed so far, but we are seeing vibrancy among stocks that have gapped up. So what I'm going to do is begin by sharing with you a company that reported several weeks ago and share with you this concept. Actually, it's been over a month now. This is Duolingo, DUOL, an online platform that educates individuals on how to speak foreign languages. Came out with numbers well above estimates. So I'm going to take a minute, mark this up. We are not seeing this much in the way of vibrancy recently in earnings, but definitely for educational purposes, let's take a look at what took place here in the beginning of March when DUOL came in well above estimates. So what we had at that time was a gap up on above average volume, and the RSI subsequent to that gap up moved into positive territory. And then we also had this nice MACD black line up through the red, signaling that this downtrend has entered a new uptrend. Now, what you want to pay attention to following that gap up is the subsequent increased upside price action or not. So if you do get that continuation rally on heavy volume, obviously it's bullish. Any pullbacks in this time become buying opportunities because you are seeing that high volume and those outside momentum indicators remaining in positive territory. I'll share also with you gaps up that didn't work and what to be on the lookout. But let's take a look at another stock that more recently came out with strong earnings, gap up into a base breakout. Not sure if I mentioned that. That's one of the key components of some of these names that do go on to greater heights. ON Holding, this is a Swiss-based athletic footwear company, and take a look at this volume. Again, came in well ahead of estimates. You want to see these high volume bars as the stock advances, indicating institutional support and accumulation characteristics. So we did get this pullback here, of course, after such a big move, very natural, but the stock found support above this 21-day simple moving average. And then also your outside momentum remained positive. At this time, we're poised for that black line up through the red and a nice continuation rally. This company, their products are very highly regarded, certainly as it relates to foot support and other factors. So from here, I'm going to go ahead and share with you actually a more recent earnings winner. And this is LuluLemon athletic wear. And take a look. So we had this nice gap up, but we did not enter into a base breakout. That's fine. But what we are experiencing at this time is a back and fill period of consolidation where this large upside move is being essentially digested. Outside momentum remaining positive, and we are seeing a nice move above that first gap up day high in price. Good news as it enters into an uptrend. Sometimes it can be helpful to pull up a longer term weekly chart, and it will provide you with that insight that this MACD is just pretty much in the early stages of getting moving higher. So from here, I'm going to share with you some of the gaps up as far as what to be on the lookout for when they do not work. And then I'll share with you a couple of names from this week that experienced gaps up. So here we are with Regeneron Pharmaceutical, REGN. Now it's not entirely over, but we did get that similar gap up and a period of consolidation similar to LuluLemon. However, more recently over the past week, we've broken below these moving averages, 10, 21, RSI in negative territory, and then that MACD crossover into a downtrend. So at this time, it's not entirely over. I'm going to use this 50-day as a key area of potential support. But what you don't want to take happen here is this price to get below that gap up here. And that would indicate a potential filling of the gap, which is not what you want to see. Let's take a look at another company that had a gap up and is faltering. This is Sprouts Farmers Market, SFM. You can see this gap up into a base breakout, pulling back. It's been a difficult period for the broader markets. And then here, more recently, we have broken below each of these key moving averages. And take a look at that high volume there. We can see the RSI trending into negative territory, and then also a move of that MACD into negative territory as well. Now, when you are looking at your stocks, of course, you will want to pay attention to what's taking place in their peer stocks. This is Kroger, another supermarket name that came out with weak numbers. So that could be certainly one of the drivers as it relates to the stock not retaining that base breakout. So here we are with another stock that did come out at the end of February, LZB, gap up into a nice base breakout. But I think you can see pretty clearly that that base breakout did fail rather quickly. You can see the momentum now in negative territory with that RSI and then also that MACD. So last up here, let's take a look at a couple of companies that did report this week that experienced that gap up. First up here is Snap-on Holding, SNA, gap up into a base breakout. Very encouraging. We're seeing a nice continuation rally, high volume, momentum shifts into positive territory there. So that is certainly constructive and again, encouraging because given today's and the general malaise in the broader markets, you're seeing high volume accumulation and a nice continuation rally. Another company that reported this week, Iridium, IRDM, not so much into a gap. Actually, it does qualify as a gap up into a base breakout. Again, a continuation rally today, high volume momentum shift. So I would say at the very least, put that on your radar. So from here, a couple of other areas that I wanted to share with you. I mentioned to you staples, and let's take a look at XLP again. This is that consumer staples industry sector group, and you can see this nice uptrend and then a gap up today in that grouping. So from here, we can take a look at some of the underlying stocks. And first up, we'd be remiss to not look at Procter & Gamble. The company came out with earnings today. Not only were they above estimates, they also raised guidance, and Procter & Gamble is attributing that to the fact that they have increased pricing on their Pampers diapers and on their Bounty paper towels. And I'll share with you in a minute why I'm pointing that out. But here we are with that gap up into a base breakout, super high volume, and we can see that momentum shift taking place there. So on the lookout for a continuation rally potentially. And the reason I'm highlighting the products that attribute it to their outperformance on earnings is you do and often will see movement into companies that are in that same industry group, but also in that same industry. And this is Kimberly Clark, known for their diapers. And we can see this nice uptrend rally here. And then today's nice almost 2% move as the stock continues into an uptrend. All those rally days are occurring on volume higher than those pullback days. So nice upward price movement there. Let's take a look at another consumer staple name. And this is all about looking at these defensive areas that are also experiencing growth. So you're getting that nice double bonus. I did want to share with you KMB, Kimberly Clark, 3.3% yield, Procter & Gamble, 2.3. And with this, you can see, let's take a look at a full quote here on Clorox as an example. And we can see up here, it has a nice 2.8% yield. And this is all about earnings back here, gap up into a base breakout, and you can see that this week it is seeing nice upward price action taking place there. Now we're looking at companies, and not Clorox in this case, but Procter & Gamble and certainly some of those other names that are coming in ahead of estimates. It's really important to also be on top of stocks that are really getting hammered if they do not come in above estimates. And this is WRB. You can see it gap down 9% today, came in below estimates. However, there were other companies that came in above estimates, but quite simply their cash flow numbers were down. So this is Autoliv, ALV, and you can see it fell 5%. One last name, heavyweight energy stock, Schlumberger, and they did come in with earnings above estimates. However, same concept, that cash flow deterioration. Certainly with SLB, it would potentially impact their yield with the lowered cash flow. But the relevance here is that when we are in a strong upward trending market, oftentimes investors will not dig in that deeply. They'll take that high above earnings estimate number and move on. But the fact that these companies are being punished despite coming in ahead of estimates really kind of highlights that we're obviously not in a super uptrending period in the markets. So last up here, I'm going to share with you some of these, what I call vice stocks. And these are going to be gambling, alcoholic beverage related, but we are seeing something of a move here. Here's DraftKings DKNG. This is a gap up on earnings, a nice consolidation into a base breakout. We have that nice shift there taking place in the MACD and high volume on that base breakout. Very, very encouraging. Another gaming related stock that we can look at here is International Game Tech, IGT, another base breakout, high volume, upside momentum. This particular company is a 2.8% yielder. Last up, we can take a look at a China. This is all about Macau and the increased spending on gambling that's taking place there in China subsequent to their reopening. This is Wynn, WYNN. And you can see not quite as dynamic, but on its way to a potential base breakout. Nice volume shift with that MACD. And then last up, taking a look at a pretty big move in Molson Coors TAP, and you can see it's rather sloppy, but certainly a nice continuation rally. So from here, I did mention that I would share with you a couple of REIT stocks, and they did come to light for me because not going to look at just any name, but I'm looking for themes, areas where there's vibrancy within the real estate investment trust space. First up here is COLD. We can see this nice downtrend reversal here, the MACD just entering into positive territory and a positive RSI. This particular company does provide warehouse and storage for goods. The name implies refrigerated goods. And then also they provide logistics for, as it relates to delivery of products. And here's another company that is in that very same space. This is PLD, not refrigerated, but they do work with a lot of retailers as far as storage, logistics, and so forth. And we can see the stock a little bit bumpy here, but above these moving averages, and a 2.6% yielder. Last up, I keep saying that, but I do believe I have just a little bit more time, but I do want to share with you that vibrancy that's taking place in home builders. And this is DHI, gap up into a base breakout on earnings, super high volume. And that's it for this week. For those of you who have enjoyed what you've seen, go ahead and hit that like button. As always, I enjoy any comments and any questions that you might have, items that you'd like to see covered in future shows, put that down below. And as always, use that link to experience a 4-week trial of my twice weekly MEM Edge report. I'll see you guys next Friday.